Lizzie Burden. Asia financial stocks outside of China and India have dropped as investors assess whether SVB's failure poses not just a U.S. systematic risk, but a global one. Throughout the region, tech chiefs are checking their exposure to the California headquartered bank. Let's get to Bloomberg's Thomas Seal. And Tom, this just shows how much of a global story this is. We're just talking to Lizzie about the UK. It's clear in Asia there's some concerns too. How is the VC world in tech sector in general reacting to this?
Well, I've never seen anything like it, Danny. Over the weekend, tech chiefs, certainly in the UK, scrambled to get this open letter to Jeremy Hunt written. Over 180 had signed it by the end of Saturday. And by that afternoon, they were meeting with the Treasury, the Digital Secretary, and other officials. We're hoping to see the outcome of that meeting potentially very shortly, as what Rishi Sunak said, ironically, himself on a trip to California, where all of this risk has sort of come from. I would say top VCs, top finance associations, and startup chiefs were all in touch with the Treasury over the weekend. And I think the Treasury had to talk to them a lot to assess. They were gathering data, is how I would put it. They were trying to work out to what extent deposits were uninsured, if they banked only in SVB or elsewhere, because it seemed to be this kind of highly concentrated potential point of failure, which has suddenly exploded into the public consciousness over the weekend.
Thomas, thank you very much. As Bloomberg's tech, media, and telecoms reporter, Thomas Seal. Now, quickly, I want to bring us ADNOC. Of course, it's had its first trading, and it's already limit up. ADNOC gas shares jumping 20%. Of course, this is its debut in Abu Dhabi trading. We'll keep on top of those moves for you. Coming up, we're also going to be continuing our coverage of the market impact from the SVB fallout. That will include the impact its collapse is having on.
সবাইকে স্বাগত আজকের আয়োজনে। আমরা তিনজন নারীর ছবি নিয়ে ছোট একটি এক্সপেরিমেন্ট করব।
In there. Skylar, hello. Crazy times.
Hi, how are
Crazy
you?
times to be living in. Good.
Yeah. Mm-hmm.
How was your weekend?
Good. Yeah. Nice and relaxing.
We can replicate.
From the world of politics to the world of business, Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority.
I think that we'll
handle this in a rational and orderly manner. This will bring confidence back to the markets, but from the Fed's point of view, there are additional dangers that need to be reviewed.
And of course, now there's a question, right? There's never just one cockroach.
You know, the kind of ripple effects I imagine? I would imagine right now the Fed is tapping the shoulders of every regional bank saying, we bought you guys a lot of time. Go out and issue new capital.
I think the bigger implication of this is that no longer can we rely on this idea that nominal GDP is going to make sure that credit markets are fine.
The SVB issue, that seems to, for the moment, being resolved, so the impact on markets should be somewhat limited.
The actions will stave off more and more fears of contagion, which I don't believe was warranted anyway.
A lot of different opinions, a lot to dig through, and a fast-moving picture when it comes to SVB's collapse. Now, one of the things that has happened here is a change to the macro picture. And I want to read to you what Jan Hatzius and the team over at Goldman Sachs wrote, because they too have changed their opinion of what it means for the Fed. Jan Hatzius writing that in light of recent stress in the banking system, we no longer expect the FOMC to deliver a rate hike at its March 22nd meeting with considerable uncertainty about the path beyond March. The market too has had a rethink. It hasn't completely priced out rate hikes, but I want to show you what the two-year yield has done. The one-month picture is really stark because, of course, we have this huge ramp up in yields as there were expectations that the Fed would be more aggressive with the data coming in hot. But what happens? This event has sent two-year yields lower by more than 66 basis points in the 3 days. The 2s10s yield curve also steepening extremely significantly. Let's get over to Skylar Montgomery-Koning, Senior Global Macro Strategist at TS Lombard. Skylar, do you agree with Jan Hatzius? Is this going to stop the Fed in their tracks?
I mean, I think, the actual event, while it is quite important for tech companies and for that specific bank, and, it's more of an idiosyncratic event. It's not systematic. It's not going to be contagion risk. And so, the Fed and the U.S. generally have put this kind of Band-Aid on the SVB issue. And we've seen it in this tightening cycle previously, right? These kind of Band-Aids, specific way to protect the periphery. The UK has done kind of the mini crisis, bond buying, little bits of QE. And so, this tightening cycle, it's actually quite normal that we've gotten these kind of issues that have put Band-Aids on by the central banks. And I think, we've gotten this Band-Aid now to contain the risk. It's not systematic, and that means that the Fed can kind of continue on the path they were previously. I will say that, because it is symptomatic of the fact that we are in a tightening cycle, you get these pop-ups of risk, and you get these issues with liquidity and just stress that's taken from the fact that you're raising rates. I mean, that's just true. And it means that, our view hasn't changed, because our view has always been that you'll get these risks pop up. And eventually that'll mean that the Fed needs to pause and then pivot. So yes, we are going to see hikes still, but, the end of the tightening cycle is very much still in the sight. And that's been our view kind of for the last 3 to 6 months.
Okay, so maybe this brings the light at the end of the tunnel more into view. Do they then, if they can continue this hiking cycle, Skylar, do they need to back off going at it at 50? Does it change that in terms of the magnitude of hikes they're able to do?
Yeah, I mean, it's interesting because we had this rapid repricing higher on the fact that we had a really good jobs data number in January, and a couple of inflation prints that were hotter. And then, you've had this kind of risk event where the market repricing has gone down rapidly. I think it's now, very much a 25 basis point hike that's priced in. I think the Fed is looking at incoming data. So we've got CPI coming out tomorrow. We've got a couple other data points this week before the Fed meeting next week. And so I think they'll look at those data points to make the assessment. And obviously the Fed and Powell specifically has put 50 basis points back on the table. But I don't think necessarily this is the right time to do a 50 basis point hike when you have this stress going on. So, signaling that they're still tightening, the end of this tightening cycle is in sight. They're still wanting to defeat inflation by doing 25 basis points, but maybe 50 basis points is much less likely now that we've had this kind of stress emerge.
Has the market gone too far then? I realize that there is some impact that you believe, as you say, from 50 to 25. But when you look at the short end of the curve doing what it's done, I mean, yields are down another nearly 18 basis points this morning in the in the front end. Would you want to be shorting this move? Would you want to push back against it?
Well, I mean, this is the interesting dynamic, right? In terms of, I think it's gone too far in the short term, but longer term, my view is very much dovish. I think by the end of 2023 and into 2024, the Fed will be forced to cut. I think that's because, automatically you'll get this kind of tightening of financial conditions that's feeding into asset markets, and it's feeding into kind of credit conditions as well already, and that's slowing the economy. And so I think, as you get unemployment rising into the end of the year, and inflation comes down, right now, real Fed funds is already positive. So that's already having a significant tightening impact. So as you have inflation come down, even if you don't imagine kind of a hard landing, even if you get kind of this mythical soft landing, you would expect the Fed to cut to keep up with inflation coming down, so you don't get real Fed funds increasingly positive. So I think right now, yes, take advantage of this near-term pullback in the front end, especially less of a move in the long end. But longer term, when you get recession, when you get cuts, you see a really large rally in fixed income across the curve. And at that point, you wouldn't really want to be short treasuries at the front end.
Skylar, I just keep coming back to this thing of it might just be too risky for the Fed to make any moves at this point. The idea that Powell risks becoming trichet and hiking into a global downturn. We also saw our reporter Valerie Teitel was talking about this. Some of the wage inflation data being more consistent with 2% inflation overall, the participation rate going back up to pre-pandemic levels. Can't the Fed afford to pause at this moment, especially when you take into account everything that's happened over the past 3 days?
Yeah, I mean, I think it's interesting because the market takes whatever the current magnitude is and it extrapolates it into the future, right? So it really depends on, whether or not they want to signal, are we very, very close to being done? Which it didn't seem like he wanted to 2 weeks ago, right? I think the problem with doing nothing and not doing this kind of well-telegraphed 25 basis point hike is that, the market then extrapolates that into no further tightening. You get a loosening of financial conditions, and it undoes some of the work that you've already done. And while we are kind of getting to that point in the cycle where we expect a pause and then a pivot, I don't think we're quite there yet. The Fed has telegraphed these kind of 1 or 2 more 25 basis point hikes. But, as you say, it does give them somewhat of an opportunity to pause. I'm just not sure that that's necessary right now if it's not kind of a contagion risk. And I don't, think that they want to risk extrapolating into, a pause continuing until you get cuts rather than, I think the market would then move to price out even more.
Skylar, I got to show you another strange move here and see what you think. Of course, this is having global implications across bonds rallying, including in Japan. The 10-year yield has fallen below 0.3% for the first time since December. I mean, what do you make of that? Almost the fact that SVB stepping in here means that the YCC adjustments maybe don't need to happen. How do you make sense of all this?
Yeah, I mean, I think it's just, broad-based risk off, broad-based moves in markets. It's all related to this kind of one impact point, but I think it's very much overdone, especially given the fact that it's affecting Japan. I mean, Japan in itself is kind of our one short within government bonds and our asset allocation. And, it's more of a statement on the fact that the BOJ is going against developed market policy that we see at the end of this year. So at the end of this year, we see kind of the rest of the developed markets pausing, and some of them already have. So those government bond markets where they're more sensitive to higher interest rates, and then they've also reached a decent level, and they've already paused, like Canada, for example. We're overweight those markets, but then the Japan is the only one that you kind of see normalizing policy and going against this broad trend. So I mean, I still like that position, even though we've had this kind of rally on the fact that the SVB issue has spread beyond just U.S. markets.
Yes, some strange moves. Skylar, thanks for keeping us in check. Skylar Montgomery-Koenig there, Senior Global Macro Strategist at TS Lombard. Now, quickly as we go to break, we are looking at futures continue to rally. Skylar Montgomery-Koenig saying that some of the move here is over.
deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
AI is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40-year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning. This is Bloomberg Daybreak Europe. I'm Danny Berger in London, and these are the stories that set your agenda. Stemming panic, U.S. authorities backstop depositors at failed lender SVB, as well as Signature Bank, after it, too, is shut. But shareholders and some creditors will be wiped out. Fed pricing U.S. stock futures jump on the SVB action. Two-year Treasury yields plunge as traders scale back rate bets. Goldman says the FOMC will hold fire at this month's meeting. Plus, UK Prime Minister Rishi Sunak signals a plan to contain the SVB fallout is in the works, reiterating the government's support for Britain's tech industry. Let's get straight into the market reaction from the backstop from the U.S. government, as well as this idea that banks will have easier capital to access to short-term capital. You immediately see stock futures jumping, both when it comes to tech, that's of course outperforming, even though the tech sector is the most impacted here, up nearly 2%. Bitcoin also rallying this morning 4 1/3%. Meanwhile, the other trade that is well underway is a rethink when it comes to Fed policy. Two-year yields continue to tumble, now down about 16 basis points. We're just talking to Skylar Montgomery-Koning of TS Lombard, who said this move is overdone. Yes, in the short term, it's overdone. Long term, perhaps there will be a more hawkish Fed, but this is not a systematic event. It is idiosyncratic. It is contained. However, the market not necessarily betting on that. 2s, 10s, also a steepening happening underway this morning. Perhaps the front end was extremely short. Also, the impact of that extra liquidity means a weaker dollar. Now, let's be clear. The impact, the concern, it is global. It is here in this country with SVB's UK unit. It is small compared to Britain's largest banks. Only $11 billion in deposits were held at the end of last year. But it does play an outsized role in the world of startups, and that's prompted UK Chancellor to warn of the danger of a collapse, what that poses to the sector.
There is a serious risk to some of our most promising companies in technology and life sciences. You're going to have to wait and hear what the solution is, but that risk is precisely why the Prime Minister and I have been working at pace over the weekend to make sure that we have a solution. These are very, very important companies to the UK, a very, very important part of our future.
We'll really have the conversation of the morning. It's Michael Moore, Director General of the British Private Equity and Venture Capital Association. Michael, thanks so much for joining us this morning. Look, I was talking to some VC folks over this weekend who basically said, we've spent our entire weekend lobbying you all. So I know you've had a lot of conversations. What have they looked like? How concerned are people?
People are very concerned. The Chancellor and the Prime Minister are right to be thinking about the impact on the economy as a whole. But within our bit of the economy, this could be potentially devastating. We ran a survey with our biggest VC firms looking at their companies. There are about 1,000 companies covered by this survey, and about a third of them have got banking with SVB, and 40% of them are actually in immediate difficulty. So we're talking about not making payroll. We're talking about not actually being able to continue with clinical trials where we're in the life sciences space. And life sciences potentially is harder hit than most of the rest. Big decisions required of them and their boards imminently. That's why the government's action is urgent.
What are you expecting? What will help that? What does the government need to do at this point?
If we're looking just at our kind of survey of there's about £2.5 billion worth of deposits locked up in this bank. That's the daily cash flow stuff. That's actually helping them function. So we need some way of unlocking those deposits, but also getting access to the loan facilities that are also critical to these businesses. There are, of course, some very small, almost lab-based businesses, but there are also some pretty significant ones that are running the cyber facilities for countless businesses across the country. For them, they don't generate cash yet. They're on the journey to profitability, so that what they have in SVB is their lifeblood. So that's why they need it now.
Are you confident that the government understands the scale of this problem? What have your conversations with policymakers been like?
Well, over the weekend, there were a lot of meetings. I was part of a discussion with the City Minister on Saturday where he brought together leading figures from the tech world and elsewhere. And I'm pretty sure the Chancellor's comments reinforce this, that they get there is a problem. The urgency of the response is the key. These businesses need the cash. They need it quickly.
Well, this is the
It's usually always like everyone's like super optimistic and excited for first year or so, and then things start to go awry, and there's usually many years of grief before this finally day dawns. So it's like 2002, and then about in 2003 is when Rosen and JB Straubel called me up and said, "Hey, we want to have lunch." I want to say Harold Rosen. I think that's his name. But he weirdly had he was a pioneer in space technology and electric vehicles, which is an odd crossover. And he'd done something called Rosen Motors, which was like sort of an electric vehicle company, and but he'd also been pioneer in geostationary satellites. So he called me up and said, "Hey, let's have lunch." So we had like lunch at like Smith and Wollensky or something in El Segundo, where SpaceX started, and so Straubel and Rosen were talking about space stuff, and then started talking about electric cars, and I said, "Oh yeah, so I was going to be working on electric car technology at Stanford," and then JB said, we should take a drive in the T0 from AC Propulsion. And I was like, yeah, because the timing is like lithium-ion batteries was really like the critical breakthrough needed for compelling electric cars. And so I was like, okay, I'll go try out their T0. Which had specs similar to what we eventually brought to market as Tesla Roadster. So then, so I got a ride in the T0, and then I tried to convince Al Cacconi and Tom Gage to commercialize the T0. Now the T0, and there's like lots of stuff online about it. It didn't have doors or a roof, so. But clearly you need to add those things, or any safety systems, and it was very unreliable, because it was just like sort of a proof of concept, basically.
I heard it was basically like hand assembled. You guys really had trouble scaling it.
No, it literally didn't have doors or a roof, or any airbags, or an effective cooling system for the battery, and it was not safe. And it was very unreliable. It would break down. It needed to be babied by an engineer, or you couldn't use it. So, but nonetheless, it did get like 0 to 60. I think under 4 seconds, 250-mile range.
It was enough to convince you that it was possible.
I mean, I knew it was possible because if you go from the energy density of lead acid to lithium ion, you've got about a 4x energy density improvement. So if you've got say a 60-mile range with lead acid, you're going to have about a 250-mile range with lithium ion with the same weight. But it was cool to see it in action with AC Propulsion, and I tried hard to convince those guys. Like I really pestered them a lot to going to commercialize the T0, and they just did not want to do it. Weirdly, the thing they wanted to make was an electric Scion, and I'm like, you guys, nobody's gonna pay $70,000 for an electric Scion, okay? That was their idea, $70,000 for an electric Scion. I'm like, this is not gonna work, okay? You will sell like 14 of these things, and I'm like, I kid you not, I have like the email trails of these. I mean, I think they're still around. So, in fact, but I even say, listen, even though I think this is the dumbest idea ever, I will fund 1/10 of it. If you can find 9 other people. And then I think the only other person they could find who would do it was Sergey Brin. So it's like, okay, Sergey and I are the only ones willing to do this, I think. And so they didn't actually get it off the ground. But and I said, it's going to fail. But at least it's something. And so then eventually I said, I'm like, listen, if you guys are not going to commercialize the T0, do you mind if I do it? And they're like, no, yeah, that'll be totally fine. Like, okay. So then I was it's like, okay, so I'm go do this with JV, and we'll go create a commercial version of the T0, and then Gage and Cocconi said, well, there's some other people who also want to do it. Do you want to maybe team up with them? He said there were 2 other groups that wanted to do it, and I was like, okay, sure. Maybe this is a way that I can have my cake and eat it too. I think that's the last word.
Never works out.
God damn! Try to have your cake and eat it too, doesn't it?
This one's gonna be easy.
No, I mean, well, I didn't think it would be easy, but it was like, I thought maybe I can allocate like 20 to 30 hours a week and just work on product engineering, and then other people can do the other stuff. But I don't even like doing the other stuff anyway. So that didn't work out. So then Tom Gage said, he said there were 2 teams, but I only ever met one, and that was Eberhard, Topping, and Wright. But like the thing that is really bugs me about them is like Eberhard in particular, the worst guy I've ever worked with, and I want to make a note of this. He is literally the worst person I've ever worked with, and I've worked with some real douchebags. Okay. To be number 1 takes a lot. It's not easy. His version of the story is that out of the blue he pitched me on funding his electric car company, and he convinced me to do it. Totally false. Mm-hmm. Okay, I was like, I'm creating an electric car company. It's like, then Gage said, well, maybe you could team up. And it's like, okay, well, maybe that might be worth doing, and so the company ended up being basically 5 people. This is Wright, Topping, Eberhard, Straubel, and myself, and so it was the 5 of us. And Topping always tries to write out of the history books because they had a huge battle, and they made me choose which one was going to be CEO. It's Wright or Eberhard, and I talked to JB and I was like, which one? Because I really did not want to be CEO. So they're like, okay, well, both have issues, but maybe Wright has bigger issues than Topping. That's what JB said. So maybe, lesser of evils. I was like, okay, fine. I got to make a choice here because the 2 of them they refused to be in the same building. So it was like, a lot of drama. Tesla has so much drama, and I was like, okay, it's not like I said, like, lesser of 2 evils. So it's like I said, right, sorry, not that I didn't think he had good points, but if I gotta pick one, I was trying not to be CEO, I got to make this rocket company work. So, anyway, so then made, it was like, Right, it's like I had to leave then. Anyway, so we got basically, we jammed AC propulsion, powertrain, and battery pack into a Lotus Elise. With the first prototyping, like really just jammed it in, in retrospect, this was not a good idea, because the car ended up weighing like 60% more than an Elise or on that order, and we didn't have enough volume to put the battery pack. And we had to we invalidated all of the crash tests because the weight distribution was different, it was heavier, so none of the crash tests were valid anymore. We had to redo the airbags. The air conditioner ran off a belt fan, so we didn't have a belt fan, so we had to have a new air conditioning system, so we had to change the HVAC system. And so basically, in the end, only about I think 6 or 7% of the parts ended up being in common with an Elise. Wow. So, and we went through a lot of trouble trying to shoehorn everything in there. And it's a cute car, but it's 10% too small. It's like, and then the costs ended up being crazy, and then there was an audit of the costs of the production cost of the Roadster by one of the investors that joined in 2007, and then they called me up and said, hey, the numbers that Martin is telling you, that everyone's telling you about the Roadster are totally false.
Oh boy.
And I was like, what do you mean? Like, he says, no, we just did an audit. It's more than twice of what he's saying. Yeah. It's like we would have to sell this car for $250,000 in order to not lose money. I was like, this is insane. Wow. So anyway, then we obviously had to fire Everhard. There was no choice about that. And then it turned out not only had he misled me directly, but he'd instructed others to also lie. Yeah. Yes. When I say like somebody that's like the worst person I've ever worked with, it's pretty bad. Yeah. So, but SpaceX also hadn't gotten to orbit at that time, so I was like, man. So then I asked, what is the name? Harris. Remember the guy? I'm blanking on the name.
Yeah, we brought in a CEO.
Interim.
Yeah, he ran like a manufacturing company. He seemed pretty smart. The problem that I found with Tesla was we were a startup in Silicon Valley, building a car that was really manufacturing and materials engineering, and it's really like all the talent was for, you think there was probably talent, in Detroit or Japan. But if you took any of those guys in to run Tesla, they would run it like a car company, and then it would be destroyed.
Well, I had no idea. You can take somebody who's running a giant corporation.
You just could not take someone from a massive company culture and have them do a startup, and yet you couldn't find anyone in Silicon Valley who knew enough about making cars. And so we kind of found a middle of the road one he was an expert in manufacturing. Flextronics.
The ex-CEO of Flextronics was an investor. And he agreed to just join as interim CEO, and this is 2007.
Yeah. But I mean, Tesla was a company you tried so hard not to be CEO of.
Yes. But the thing is, this is misinterpreted. If I say that, it's misinterpreted as like I somehow don't love Tesla, which I do. It's just like trying not to go insane. With work.
Yeah, being CEO of a real startup is 80 hours a week. Being CEO of two is 160 hours a week, and there's only 169 hours or something of sleep of 168 hours a week. So, like, you just can't physically do it.
Yeah, I mean, the pain level is extreme. So, that's Anyway, I tried quite hard not to be CEO, but had to be. No choice. That or Tesla would die. So Everhard was fired in July 2007, and he was at the time we didn't know he'd instructed other people to lie, so we thought he was just, it wasn't as bad. But once he left the building, then it turned out no, he'd actually orchestrated a massive deception, which is quite bad. He also said he came up with the name of Tesla Motors, which is false. That was created by a guy in '95, and moreover, he knows this because we went to great length. We had to buy the trademark.
Yeah, exactly.
So he can come up with the name. It was trademarked in '95. So it was like there's a whole bullshit backstory of that. But the guy, we almost had to change the name of the company because the guy who owned Tesla Motors wouldn't communicate with us, and so eventually we sent the nicest guy in the company, who's weirdly Martin's best friend, which I don't understand, but Mark Topping, super nice guy.
I like Mark a lot, actually.
Yeah, you can't not like Mark. It's impossible. He's a super nice guy. So we sent Mark to go sit on the guy's doorstep and not leave until he until he agreed to at least negotiate with us or something. He talked to us, and then we ended up buying the trademark for $75,000.
Good deal.
Yeah.
Was he the one who owned the domain too?
No, that was a whole different nightmare. But the domain guy, that took us 10 years to buy that Tesla.com domain. Man, and he is, I think, still like a networking engineer at Juniper. So, yeah, that was, and that cost us like $10 million.
Yeah, that was
crazy.
Like the guy just held out.
Yeah. Was he just sitting on the domain, or was he using it for something?
It was impossible to. No, he wasn't using it for anything.
Just holding the name. It's like Twitter handle Falcon Heavy isn't being used. We're fighting for that one.
Yeah, so man, took us ages to buy the Tesla.com domain. But we were gonna have to change the name to be something else, and actually, the lead candidate was Faraday as the name, because Faraday invented the electric motor, and then Tesla perfected the electric motor with the AC induction motor. So it was, if we couldn't do Tesla, we would do Faraday, and then ironically, a competitor was later created called Faraday.
Faraday, yes, a startup. From China, right?
Yeah. So.
Did you guys have a Faraday logo or anything? Were you that far down the
No.
track?
We didn't really even have a Tesla logo until later, because there was nothing to sell or anything. So, but in the end, the Tesla logo and the Tesla font was done by me working with basically a little firm. That's why the Tesla and SpaceX. There's some similarities between the fonts, and that's because it was done by the same people. I spent a lot of time on the Tesla and SpaceX fonts. Get the little things.
That's cool.
You
want to eat now?
Yeah, sure.
Excellent.
All right.
Awesome.
It would be much easier if the world was flat, or if you're in a flat situation. As soon as things are not flat, and you've got the world is like, it has undulations and curves, and then the car can be at any kind of angle, and then if you accelerate or brake, it's actually going to tip a little bit.
Yeah,
you've got sort of